Incoming transmission standby. Welcome to the Nod News Network. The West's treatment of ordinary Russians is beyond good and evil, according to Sber's CEO. The CEO of prominent Russian lender Sber, Herman Gref, warned on Wednesday that inhumane Western sanctions placed on ordinary Russian investors have damaged international markets and will harm future investment opportunities. Gref claimed in an interview with Russia 24 on the sidelines of the Eastern Economic Forum in Vladivostok that trust had not been destroyed in the markets themselves, but rather in those issuers, or in those countries that have introduced completely, in my opinion, inhumane sanctions against people. In my opinion, the way they treated ordinary investors, ordinary people who invested in papers and entrusted their money to the largest international companies, goes beyond good and evil. At the same time, Gref emphasized that faith in the stock market could scarcely be shaken, adding that it should be taken for what it is, with all its pros and cons, such as volatility on which some make money and others lose. The stock market will always play a very big role since there is no other way to make money for the majority of investors around the world, according to the banker. The EU, US, and their allies have frozen hundreds of billions of dollars in Russian governmental assets and monies belonging to its individuals as part of sanctions related to the Ukraine crisis. Russian retail investors owned approximately 20% of the assets held by Western financial institutions, according to Russia's central bank. Last week, Kremlin spokesperson Dmitry Peskov warned that any attempts to use Russian cash prohibited by the US and its European allies would result in legal action, adding that no case of such illegal retention will go unnoticed. This has been the Nod News Network, transmission complete.